Excellent. So welcome, guys, to another Tuesday night training. Let's get ready to rock and roll. Brian, no worries, mate. Absolutely fine, dude. Just join in when you can. Right, I want to first start off with kind of how the structure of these meetings work. There's always going to be an element of mindset. There's always going to be an element of like practical advice. There's always going to be an element of you know, the skill and repeating the skill over and over, just so your eye is like literally default trained to seeing the third hit, scanner, bosh. We'll go through it all tonight. I kind of want to do this on purpose. We've got a mascot for the team. So let's jump straight into some mindset, because you all know me. I was very resistant to mindset in the beginning, and it's what I concentrate most of my time on now. The skill I've got is nailed, and I'm always trying to improve it. But I know when I'm not doing well, it's because I'm not following the rules, and my decisions are being altered by the way I'm thinking. So, you know, if I'm stressed, annoyed, bored, whatever it is, that was altering my performance, which you can't allow to happen. If you're going to be a pro, you need to be like a robot, like we've talked about before. But tonight, I'm going to really talk about 3 different types of traders. So if you've heard this before, it's a good refresher. If you haven't heard it before, then make some notes, because this is massively, massively key. So I'm going to start off with the guy you do not want to be. This is the person who gets frustrated, says trading doesn't work. Hold on, I need to share my screen. Hold on. Great. You'll be able to see my screen. So the first person you do not want to be in trading is Mr. Boom and Bust. All right, I'm going to show you exactly what their account looks like using a trend. So you start off with some money here, and you might win one. The next one you lose, quite a heavy loss. And then you do something like this. Then you have a big win. The whole time, your account is just sort of all over the shop. Looks like someone's heart rate. Pretty much, you do not want to be this guy. This is the person who loses his account. This is like where you started. And that's the person who, you know, oh, the strategy doesn't work. You know, it was all good here, then it doesn't work. And then I had another win. I'm going to look for another strategy. Oh, actually, this works. Oh, no, it doesn't. You know, this is the person who will waste time looking at all different strategies when they actually all work. All right. Also, this is a real big indication that you haven't mastered how to manage your risk, which is what I'm going to really focus on tonight, is managing that risk so that you're in control. So don't be boom and bust, all right? You don't want your account to look like that, all right? Simple as that. All right, second person. Again, ideally, you don't want to be this guy either, or girl. Who we call the loser. My 7-year-old sniggering. Right, the loser has an account that looks like this. All right, I'll tell you what, a loser is better than a boom and bust. All right, they'll have something that goes like this. And if you're good at trends, this kind of looks like a downtrend. Yeah, the account started up here, but every trade they take, you know, they win one, lose one, 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 win one, lose one. What this identifies to me again is number one, risk management is nearly there, but the risk profile is off. So what I mean by that is you know how to manage how much money you're risking, but overall you're still losing because your risk reward probably isn't the best. If you're doing a 1-to-1, so you're risking 1% to make 1%, you have to win a high proportion of your trades. So having a 1-to-3 risk reward, which is what we've talked about, is giving you the best chance to be rubbish, still make money. And I'm sort of playful with that because trading's not easy and you're going to lose. But imagine being a loser that wins. You know, you lose more of your trades than you win and you still make money. But that is the pinnacle. That's exactly what we talk about often. All right, so be that person that can lose, but still walk away with money in your pocket. Now, what we're all aiming for, like the pinnacle, winner. This guy's the pro, or girl is the pro. All right. And this person's account resembles more of an uptrend. This is the person you want to be. You have steady wins, you lose some, but you're winning maybe only 50% of your trades, but your account is regularly going up. Okay, this is the pinnacle. This means that you know how to manage risk, which is what we're going to focus on next. You know how to, well, yeah, I've just seen that in the chat, mate. No problem. I'm going to pop it in the group. I'm going to cover it next, so you'll see. But the winner, the pro, they know how to manage risk and they've got their risk reward on point. When they lose, it's only a small decrease in the account growth. And when they win, they go and make more money. They then lose, it pulls back, but they're never back at break even. They're just making steady incremental profit. That, my friends, is the secret. That's the pinnacle. All right. That is the pinnacle. Now, why is this important? Well, I've helped a lot of people in the last few months. And one alarming theme I found is that people don't work out their risk. All right, they don't work out their lot size. They don't do anything that is kind of sensible in terms of protecting their money. So, all right, let me just demonstrate something on here. So imagine you were buying AUD CAD from here. All right, you select your long position, you enter the market. This is just for demonstration, and you put your stop loss below the low. Yeah, and then your profits like way up there, whatever it is, 1 to 3. The way to manage risk is you need to know if the price goes and hits your stop loss, you need to know how much money that represents. Yeah, if you just put one standard lot on, how much money is that? All right, it's $10 a pip. We don't trade in dollars. We trade in pounds usually, and even that is kind of rough. It doesn't really always work. So what I would do is when you select you've drawn up your trade and you know how much the stop loss is in pips. So just a real quick recap. This number here that I'm circling, 27.1, that is the pips. It's 27 pips. Okay, over here, it also shows the difference in the price from entry to the stop loss, 0.00271. So again, we don't care about the pipette. That's the last number. It's 27 pips. All right, so we're going to look at AUD CAD. We're going to risk 1% of our account on, I've got a parrot, 27 pips. So this is how we do it. You look up. So I'm going to send this in the group once we're done. But this is a position size calculator. If this has to be in your routine before every single trade that you take. Every single trade you take, your position has to be calculated before you enter. So we were looking at AUD CAD. We trade in pounds. The account size is 70,000. We're risking 1%. The stop loss, just to remind you, is 27 pips. I don't change that. Just leave that as it is. And now what it tells you is to rate the results. You're going to lose £700, but you need to put a 4.53 lot size in. So when you're entering the trade, on MetaTrader, you're putting in 4.53 lots. Okay. That means when you enter this trade, every 27 pips is £700. If you go and knocks you out of stop loss, you know exactly how much money you're risking. All right, that sounds so simple, doesn't it? It sounds like, why wouldn't you do that? But believe you me, people do not. People just chuck 15 lots on. And I'm like, where's your stop loss? I haven't got one. And it's kind of worrying, because the biggest thing about being funded is not losing their money. Okay, so the people that are new are the people that are picking this up again. Working out your lot size is like, if you're not doing it, don't expect to get funded or be funded for long, because you can blow your account in one trade. You'll go back to that boom and bust of psychology where things get very stressful, trading doesn't work. That will be your heart rate, not just your account. You know, it'll be up and down. 1 minute you're a winner, next minute you're a loser, next minute you're king of the tree, whatever. And then bye-bye, you've got no account left. You're starting again from scratch. Okay. We're making long-term independent traders. You've got to be able to do this stuff, all right? This is simple. It really is like a must. Very, very simple stuff. So practice with the position size calculator. I'm going to drop that in our group. Where are we? Fastrack Freedom. So you can pick it up there and copy it. Okie doke. And nice and simple. All right. So I'm going to move on in like 10 seconds, unless anyone's got any questions, put them in the chat. But pretty straightforward. So be that winner. That winner means that you know how to risk 1%. You know your risk reward needs to be 1 to 3. And then to work out your risk, you do your lot size calculation before every single trade. Okay? Every single trade without fail. Okay. There you go, mascot.
Yeah.
Amazing. All right. Next. Now this is something that I've wanted to cover for a while. So for the brand new people, again, this may be a bit advanced, but it's 100% necessary, because it's a very, very important aspect to the way I trade. But also, it's something you'll cover in future sessions. So the fact you're seeing it now, if you haven't seen it before, you're just seeing it early. So that's no problem. When you get to the videos where it's covered, hopefully you'll just recognize it a little bit more. It won't be too crazy. But what we're going to talk about next is divergence. A divergence is simply the market being manipulated. So that means that, you know, there's not enough volume in the market for the price to go to the level it's at. So it's normally where the banks are trading and they're pushing the market around before they make the real move. So there's a few ways to spot it. And we're going to use our indicators and use the scanner. I might hop over to a few different charts just to get a few more examples, okay? But I'm going to delete these two just for a moment. All you need for divergence is you need the stock. Sorry, you need the AO and you need the pattern. And simply, what you're looking for is put a vertical line on X, a vertical line on B, I put vertical line on D. And if you can clearly see, let me get a trend line here and make it a bit thicker. But between X and D, all right, price is going up. Okay, if I can make that thicker. Okay, X to D, price is going up. All you're looking to do is look at AO from the same points and just see what the bars are doing. So You've got to remember as well, the indicator is slightly delayed. So see that swing high there, that peak, that doesn't actually appear on the AO until a few bars later. So you go from like the highest part there to the highest part here. But can you see that that price is going up and the volume is going up? That's an example where that's not divergence. Okay, it's doing the same thing. Okay, I want to show you where it's doing opposite things. Now, buddy, you can draw on here. You can also look from B to D. So let's do this. We've got B to D. Again, that's a sharp incline. And then B to D on here, again, is going up. So UJ has no divergence. Okay, I like to trade with divergence because it indicates that there's going to be a reversal in the market. That's basically what it's showing you. So we do the same again. So we've got X to D here is going down. What's it doing on AO? So we line up for X. So it's going down. Again, no divergence. All right, I want you to focus mainly from the scanner using X to D. I'm going to level this up in a minute and show you how to do it a few different ways. But from X to D, price is doing the same. B to D, price is going down. B to D, price is going down. Okay, these are not good examples. This is not what you want to be trading. That went on to TP3. I don't, it doesn't matter what the result is. I want all my rules to be there before I trade. So then we go down the list. GN, let's just have a look. All right, we might have something here. So X to D, down. And then we've got that peak. So this peak, kind of level. So it's not the best. Again, it wouldn't excite me. It's kind of going up, arguably, but it needs to be more obvious. What I do like, though, when you watch the videos, let me do this. Right in the middle here, you've got like the baseline. Let me thicken that up. So in here, you've got the baseline, which is at 0. So you can get that bang on 0. And what I do like is that when the bars are above the baseline, it's in an uptrend or a positive relationship with price. Like that. When it flips over to the downside, that's called a negative. So I like that. And then it comes back up. So it goes uptrend, pullback, uptrend. Or uptrend, downtrend, uptrend. That's positive, negative, positive. That's what you want to see. So you see on EJ, like we were drawing a divergence within the pullback. When the bars are reducing, it's pulling back, not a switch in trend, which is what you get when it flips. Okay. You can look for divergence on any time frame. The higher the time frame, the more the longer the reversal will last. So on an hour, it's perfect because you're going to get that swing, that new swing low, especially if you're with the trend. GN, not the best, but we had a positive, negative, positive. B to D is going up, and AO is going up. So no divergence, not enough for my liking. And this is what you do. When you do this over and over and over again, this will just become, you won't even have to draw it. You'll just see it. You'll just see it. So X to D is going up, X to D is going up. But we've got a negative, positive. So you'd want a positive, negative, positive relationship. So again, not great. Okay, this is a bigger pattern. What have we got in here? From X. All right, this might be where we level it up a little bit. So X to D. Okay, it's clearly going down. X to D is clearly going down. Yeah. Right, B to D. Move this. Okay, you can see that's clearly going down. Going here. Okay, clearly going down. No, we haven't got any divergence. What have we got in here? Nothing. Okay, so sometimes you get hidden divergence, which is in this last push down where it's making new lows. It will start to do the opposite on the AO, and that's where that's like a hidden divergence. That's really, really, really good. If you get hidden divergence with like X to D, B to D, and hidden, you know, it's definitely going to reverse. If you're with the trend, you're in good shape. We haven't had one yet though, so let's have a look at UChef. X to D. Okay, this is a little bit scrappy, but I would definitely advise you all to look at these divergence on your trade if you're not already. So you can see X to D is going down, yeah, but here X to D is going up. As we get closer to price, we've got this swing high, so you can look at all the swing highs in the market and look for divergence off them. So off the swing highs only. Okay, not like swing low to swing high, just swing high to swing high. So from here to here, the AO is going up and price is going up, so no divergence, no hidden. What we've got B to D. So B to D is kind of the same as X to D, but it's going up, going up. So we have divergence X to D. Okay, it just means that there's going to be a sharp reversal, especially on the hour. Ian, any questions about divergence, please fire away. But this is definitely something that I've added into the scanner source confirmations. I tend to not like if everything else is there, like all the fib levels are there, and it's like bang on like a third hit on structure, then I'm not too bothered about divergence, but I'd prefer it to be there. Like the first trade of the month for me. So after a profit split, you basically start again unless you leave some in. So that first trade, when the account is at 70k, like I'm pretty much looking for the most perfect setup so that I get off to a winning start. So I normally look for a trade with divergence. You know, to nail it, basically, nail that first trade. So exaggerated divergence, Fiona, I believe is what I was showing. I think it's the same as hidden. I'm not too sure, to be honest. But I'll show you what I look for. So let me find an example just by eye. All right, so we've got B to D there going down. And to be fair, when I watch Manny, yeah, Manny says, yeah, good points. Manny always named the different types of divergence. It doesn't, in my opinion, it doesn't really matter. He actually says in his videos, you know, don't get too caught up in what they're called. Just look for the price doing the opposite. Where people go wrong is you've got to go from like swing highs in the market. So you can't be looking at like low to this high. Is there divergence from high? Like I see a lot of people not sure where to take it from. So literally any swing high in the market. So you could look from there to there. So that was going down, like pretty sharply down, but the AO is going up. So down from here to here, the market's going up. You've got the opposite going on. Yeah, I wouldn't worry too much about like hidden, exaggerated. I look for between B and D, if there's divergence in that last leg before entry, then X to D and B to D, and you're all good. You are all good. Swing. Let me look for. There was a real good, really good divergence on one of these. Let me have a look. Yeah. I was stalking EJ last week. So I was going from this swing high, looking for this reversal. And what it was doing around here, like the price was below, the price was going down, but the AO is going up. What happened is the market kept going up and then, you know, made equal highs where the market's going up. I think this will turn over, especially from where it's already turning over. But sometimes the market just can carry on, and there used to be divergence and now there isn't. So I just all right, this is a good example. Okay. All right, so we've got CAD Chef, which I was looking at last week. Like cone correction going on. We had a nice fib level at this area, but it didn't stop. So I was looking for divergence from my first swing, my first hit to my second hit. So let me get a bit closer. Right, so I'm looking from this red line basically is going, you see that, let me delete. You see that price is clearly coming down. It's still under this swing high, yet the AO, that bar is going up. Okay, that is going up. So then I would look from this swing high to this swing high. Very slightly going down. And that's kind of level. That's hidden divergence. I always look for divergence on the hour. 15-minute divergence happens an awful lot because it is more volatile on the 15-minute candles. So I don't like to get sort of faked out. So hour only, I'll look for divergence. I'll just be tracking this all the time. When there's divergence present, it is going to move. It's going to reverse. So this was a beautiful correction that ended the break of the lower line. And then the McGinley started doing their thing. The trade started to trigger and we dropped. I'm not going to walk you through that one, though. I just want to show you the divergence. So that is divergence in a nutshell. You making notes, H? Kind of. You're going to say hello to it? No, you've gone shy. Okay. Right, so any questions on divergence? I'm going to open up the mics at the end so you guys can ask specifics. But anything before I move on, I'm going to move on in a few moments. What I want to talk you through is the scanner has been pretty quiet for a few weeks. Last week was one of the first weeks where I didn't like anything that the scanner produced, and that's the first time I've ever had it happen to me. You know, it's just one of those things. It's market conditions. If the algorithm doesn't fire, it's because it ain't ready. So the week before that was fairly quiet, but there was a really good trade with GU that when it hit all TPs, it was an absolute cracker. So you only need one a week to make some serious wedge with the way we use the strategy. But what I do want to show you is AJ. Let me just reboot this because reboot. So look at the 4 hour, look at AJ. Right, so the first thing, I haven't got any of my indicators on. This is how the scanner loads up. I only use Hot Forex, as you know. I'm only mainly looking at the hour because you get more patterns. I will also have a little look at the 4 hour. The 4 hour and the 1 hour is what Manny says this works best on. Obviously, you get less scans on the 4 hour. What I do like is when I'm stalking a pattern on the hour, if it's also present on the 4 hour, then I know I'm in quite a good position. But I'll show you AJ because this came on 23rd. which was Friday. So this would have triggered on, well, maybe Sunday night, but let's walk through it. So first things first, okay, number one rule is we trade with the trend. All right, we are trading with the trend. What are we doing, H?
There.
Oh, time. All right. So how do we work out if we're with the trend? The first thing I do is I zoom out from this pattern and just look at the market. Like, what's going on? Well, I can see this going up. Market breaks the trend and is now trading underneath the trend. And then see this structure point. And we get a box. I see this structure point in here being very, very crucial.
What's your legs like?
It's like a PRZ zone. Yeah, so was a ceiling, and if I go further back, I'm sure there's more. Probably start bugging out. Probably a long way back. Okay, all right, whatever. But it's there was a ceiling, breaks, bounces, bounces, bounces. So we've got 1, 2, third hit, fourth hit breaks, then acts as a ceiling, and now we're getting a cell underneath this structure. So this, all of this, is a market structure reversal. Wow, that's loud. Bring down a bit. All right. So we've got this whole section here, which is like an end of a trend going into a new trend. Once it breaks that low, we're in a full swing downtrend. Okay. The other way you can do it is just mark the swing high. So you've got swing high, swing low, and it pulls back. You can do all the fib levels if you want. Swing low, pulls back, swing low. You can just see that the market's making higher, lower lows and lower lows, lower highs. Yeah, I always get that confused. But the market's going high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It is. And then this is now the next lower low. Sorry, lower high. And now it's going to hopefully go make a new lower low. So we've got market structure reversal. Before we even look at anything else, we've got market structure reversal, end of an uptrend, start of a downtrend. The trend is making new structure, new lows in the market. All right, we can do a trend line from there. We can do a trend line from here. We can try and find a trend line, but there isn't one. So a trend line is just one way. It's like the easiest way to spot if we're under in an uptrend or a downtrend. So this didn't give us like a clean line to trade off, which is my preferred way. But we have got a market structure reversal, new higher highs, lower lows, all that jazz. We've got the scanner on a 4-hour pattern giving us a sell. So let's move over to trading view.
I'm trying to draw in this picture.
Right, so the scanner was in around here. This was the scanner pattern, I believe. So we're looking for divergence. So we've got the structure level in here. Have we got divergence? Well, look at this. We've got a swing high here. Market's coming down. From here, volume is going up. Yeah, so the market's coming down, the volume's going up. So basically, it's saying that there's loads of orders in the market, but the price isn't getting up to these levels. So there's some manipulation going on. We've got a lovely flag correction, which was broken. Then it's retested the support, which is now resistance. And boom, we get a drop. The entry was like I think the entry was called here. You have one chance, and now you got a second chance. This is a big move. Okay, this is a big move. So we've got, you're probably looking at 150, 140 pips in that move. We're entering it 3 times. I would still use the 1 hour. I would just use the 4-hour structure, but I would be looking at my analysis on the 1 hour still, and then a 15-minute entry. All right, so there's so much confluence, which means the market in one area giving us multiple reasons why to sell. Multiple reasons. So we've got a bear flag correction. We're under the trend. We had the market structure reversal. We've got a scanner pattern telling us to sell. So all in all, the scanner pattern it's got so many informations on its own that we're just layering a bit of structure just to make sure we pick the best one. But this AJ is the trade of the week at the moment. That is the one that I would have traded. I've got the pup this week, as you can see in here. And that's very creepy. So I did not trade this, but this is what I mean. If you're active on the charts, don't neglect the 4 hour. What I see a lot of people do instead is they'll go lower because there's more patterns. Don't be tempted by that. The results will be a lot worse. The moves won't be as long, and there's lots and lots of structure that gets confused with pullbacks in the shorter time frame. So you hold it, mate. So I want to show you a couple of things to stay away from. So AJ, I hope you all that all made sense. But you're looking at, are we trading with the trend? Yes. Then we use scanner source to enter. That is it. Scanner source is our entry. That is all. We want to make sure we're trading with the trend. Right. So if we're looking at the 1 hour and we use that same concept, are we trading with the trend? Was UJ, USD, JPY? Was that a trend trade? Was this a good sell? Okay, so look, we can look at this. We've got an uptrend now broken. Have we got a structure at entry? It's a bit scrappy, isn't it? But there's something going on there. Highs, we've got breaks, we've got touches. Cool. The pattern's quite small though, so I would always stay away from small patterns because 50 pips to TP3. You know, the swing low, if this is in a downtrend, you want to go and take out, this is the structure you want to, you know, break. So that wasn't too bad. You got an equal high. What's the fib level? Like you'll just get used to doing all this, like fib level from the swing, below, and we've got a 618 near enough. If you went from here, it's pretty much equal. Yeah, UJ not looking too bad. More of the I don't know why. I would prefer, I do like this low here that's knocked out all of this, all of these lows. This low is just going to punch them all out. All of these lows out, which I do like, but I do want to see another wave. I want to see another low before I'd want to trade it. I want to be trading the third hit. So really, if we're looking at being super picky, if we're doing our trend line from here, the trend line's broken, but I think this is our first swing. It's a 618. That's our first hit. We want to go and see the second one come and hit. And ideally, if you're good at trading, you can trade the second one once you know what you're doing. Really, you want to see the third. That's like an established trend. Okay, this is still brand new. This could still be like a larger market structure reversal. It could be consolidating for a little bit longer. Who knows? You don't want to get caught up in things like that. That's why I look for the third hit. Okay, concept on this one. Okay, this one to me, EJ was bullish. It was bullish. Then we've had some moves down. Wherever you want to take it from, you can probably take it from here because this is the correction. But this was calling a buy, and arguably in a new downtrend. So tiny pattern. You want to be trading with the trend. No, thank you. So that's pretty much the secret. So Neff, don't worry, mate. Thanks for jumping on. See you soon, bud. Yeah, so let's just recap tonight's points. So we talked about the 3 types of traders: boom and bust. You don't want to be him or her. You don't want to be a loser, but you are getting close if you're losing and it's just steadily decreasing and not these huge extravagant changes in your account. But ideally, being the pro, being the winner, that's when you know how to manage your risk, you know how to calculate your risk, and your risk reward ratio is a 1 to 3 at least. Okay, that's when you're, you know, effectively you can take more trades, be less accurate, and still win. That's the position you want to be in the market. So you haven't got the pressure of being right all the time. We would look at the lot size calculator, so that's now been shared in the group. For those of you that haven't got it, there are other lot size calculators. I use Stinu, which is an app on my phone. I just find it easier and slicker on my phone to use. But you do have to pay for it. It's not free. It's just like 15 quid a year, but it's all good. We then talked about divergence. We looked at a lot of examples, looking from X to D, B to D, and hidden divergence, looking at swing points, the swing point, and then exactly how we use the scanner. So the scanner is our absolute go-to. That's the first place I go to when I'm looking to trade. I want to come on here, find a pair that's with the trend, go to trading view, mark it up, you know, loads of market structure going on. All right, we want to see the third hit. So I've marked that as 3. I don't think that's 3. I did that just before the call. But you want to make sure you're under the trend, or there's enough confluence to make sure that you are trading in the direction of the market. So we're selling in downtrends, buying in uptrends. I'm going to end on this one. This is a trade I've been waiting for what feels like a lifetime. I can't wait for it to come. We've got one hit. So these hits here, in my opinion, they haven't got to make new highs. So that's like the end of the correction. That's all one. It then goes and makes a new high. Bosh, that structure pulls back. Hit number 2, goes and makes a new high. I'm now waiting for the third hit. All right, this is NZD CAD. So I'll be looking for, I want divergence. So I'd want to see, you know, when it comes to here, the market going lower, but the AO bar is going up. All those sorts of things going on. There was divergence here, market going down, but on the AO going up, and then we get a big push. But this is going to be the one that I wait for. So third hit on the trend. I want to look for divergence. This yellow box here is a 786, a 618, and a 127 extension, all in like 4 pips. So that's like my ideal buy zone. I'm hoping that this is just building liquidity up here. We'll then run the lows that it's created here. Bosh, trigger for scanner source on the 15-minute wallop. Go and make that new high. If it's anywhere around here, you know, we are, who needs 175 to make money? But there's an awful lot of room to make an awful lot of money. Awful lot of room to make an awful. So that's me done for tonight. I'm going to let you unmute yourselves. Now unmute yourselves. If you've got any specific questions you want to cover, feel free to ask. I want to say a big thank you to my little boy H. He's going to be our newest funded trader one day. So So let me know if you've got any questions. Bill, I know it's your first session. I hope you enjoyed it. Paul, thanks for jumping on. Paul's not in our team. He asked to join the session through Bryony, so more than happy for you being on the call, Paul. I hope you found it helpful. Paul said, well done, H. So amazing. All right, Ryan, you're a legend. Our newest funded trader, still shows up to these calls. I'm going to get you doing more of the hosting, Ryan, in the future, because you trade like an absolute boss. Fiona, absolute legend. Absolutely going to be funded within the next few weeks. School holidays is your time to shine. And there's loads of us in the team that aren't on tonight. That when you watch this recording back, if you've got any questions, do please get in touch and use. Yeah, amen to that, Fiona. Indeed, use our groups. All right. If you've got any questions, want to drop charts, anything you need, pop it in the groups. We're all there to help each other. We've got 5 funded traders now, so there's a wealth of experience and success. Fiona said, well done, H.
Yay.
So yes, that's it from tonight. I'm going to play us out with some music. If you've got any questions, please do message me. Paul, if you don't know how to get in touch with me, ask Bryony for my number if you've got any further questions. But really, those are the little secrets. Knowing your risk is so important. Spotting divergence just to really identify a reversal area. And then we're trading with the trends. We're looking for the third hit. We use the scanner for like a signal, and we enter with conviction. All right. Every time it happens, third hit, we are trading. Nice one, Will. Nice one, buddy. Amazing. Loads of notes. Will says, well done. You did well. All right, brilliant. I'm going to play you out with some music, guys. So thanks again for showing up, and I'll see you all next week.